Good morning. Welcome to another edition of MasterMind Minutes. My name is Gary Occhiogrosso. I'm the managing partner of Franchise Growth Solutions. And as those of you who have joined us in the past know, MasterMind Minutes is the webcast podcast where we have one guest, we ask one question, we get one answer, and we do it all in minutes, not hours. And today my guest is Eric Schecterman, who is the Chief Development Officer for Benetrends Financial, which is the nation's leader in franchise funding. Eric oversees sales, marketing, and strategic relationships, and he'll tell us about a lot of other things that he's got going on. He has an extensive knowledge on the ins and outs of franchising from the back end forward and has helped thousands, I was going to say hundreds, but thousands of small businesses open their doors, many of which are franchised businesses. He's a featured speaker at numerous franchise conferences. He's inspired entrepreneurs with successful small businesses and helping them with their funding strategy. He, in addition, specializes in transitioning six-figure corporate executives exploring careers in franchise ownership, which kind of connects to our topic today because a lot of that's going on during our current pandemic. So, Eric, thank you very much for being with us today. Tell us a little bit more about yourself, if you'd like, and tell us about Benetrends, what's going on, and then we'll get into the question.
No, thank you for joining me, letting me join you today, and thank you for all the listeners listening in. I mean, you covered a lot there, but yeah, I mean, I was introduced to franchising myself a little over 10 years ago. Before that, I thought it was, McDonald's, Burger King, Pizza Hut, pretty much all the places I would eat at. And one day somebody said, hey, there's this company looking to hire a sales manager, and they do franchise financing. And really what they do is they help people utilize their retirement funds without paying tax or penalty. And I think I said to my friend who set me up for the interview, so are you trying to get me like arrested or something? Because that sounds illegal. So not only did I not know about that program, I didn't really know about the world of franchising. And that was a little over 10 years ago. And it's just been an infatuation of mine ever since, being with Benetrends and learning about the industry. And, I love speaking to your audience just because my two passions are, one, obviously helping the entrepreneur, but really helping guide franchisors and have them making the right decisions and understanding, just as important as what business somebody chooses, how they finance it is sometimes as important, if not even more important. So no, I mean, that's what Benetrends has been doing for over 35 years. The founder of Benetrends, Len Fisher, is actually the original architect of what's referred to as rollovers for business startups funding. So obviously we can touch on that a little bit, but no, I mean, it's I've always loved talking about franchise funding. Talking to your audience is exciting, but combining all of that in this lovely environment of 2020 makes it even more interesting because it's, it really creates a lot of conversation around it. I've been doing this a lot throughout the year and happy to continue the conversation because it is changing daily, weekly, monthly, by client, by bank. So I'm happy to address a number of topics today.
Great. And yeah, I do recall when I first heard about the 401k rollover, or I forget what they were called 30 years ago. The first thing that struck me as you was, can you do that? Is that legal? And I remember going to various franchise conferences, many of which were conducted by attorneys, part of the FBN. And very often it would come up and there would be arguments about, whether or not this was, a legal thing to do. And obviously it all shook out, and it is, and it's been a great opportunity for entrepreneurs and people wanting to get involved in franchising to really tap into those funds. And again, in this current climate, we're seeing a lot of uptick in franchise activity, people going into the franchise business, people who are no longer or made a decision not to go back to corporate America and, doing some soul searching and deciding, I'm going to venture into my own business. So this is a great way of funding it. And as you pointed out, how you fund your business is very important to not only the overall success of the business, but the manageability of getting involved in a franchise or even an independent business. So I guess with that as the backdrop, I guess to say, as we kind of continue through COVID, it's not ending, hopefully, and I believe we're closer to the end than the beginning. And those of you who've listened to this program over the last several months know that, I'm constantly saying, I'm unwilling to even accept the notion that it's a new norm. I think things are temporary. However, that being said, I think there are some things that have come out of, our experiences that are great learning experiences that will carry forward long after COVID is, a distant memory. But with the crisis kind of as at the backdrop and so much activity going on in franchising right now, what are you seeing as changes, perhaps, pivots in the funding process for franchisors and franchisees? And, what advice can you share with us on both the franchisor side, which is kind of my pond, and then the franchisee side?
Yeah, unfortunately, it's similar. There's really not a lot of differences there. I always like to steal a line from our CEO, Dallas Curley, and I hate crediting him for using this line, but I feel like this year it's more applicable than ever. And he always said, when all you have is a hammer, everything starts to look like a nail. And I feel like in times when banks are strong, lending is strong, everything's great, we're not in a COVID environment, everyone just holds on to their hammer and they just go that one route, and that's their one tool. The biggest thing I would say about 2020 and in this environment of COVID, pre-existing, past, whatever it is, it's going to teach everybody you can't just go into funding with a hammer. You need to exhaust all of your tools. So, just looking at cash and saying, well, I'm just going to buy it with cash because that's easiest for me. Well, maybe it makes sense to hold on to your liquidity and combine it with an SBA loan, home equity, some type of retirement plan structure so you can exit the business properly. If it's doing an SBA loan, how do you get that equity injection? If it's using the retirement funds, do you use all? If you told me right now, if this was a year ago, that I'd be having a conversation with a client and saying, well, maybe you should look at what you can get in a home equity line of credit versus getting an SBA loan, I would have said you're crazy because, a year ago, SBA was just flowing, the banks were involved, everyone was competitive, getting the interest rates and all this and that. And home equity loans, probably a good interest rate, but, they were what they were. Now I had a client the other day where you have a $250,000 SBA loan at a 6% interest rate that they want him to put 20 or 30% of his own into. And then you got a 2.5% home equity line of credit for $300,000. No business plan, no projections, just off and running. And listen, what that person ultimately decides to do is up to them. But I think that what 2020 has showed us is figure out what all your tools are, and then you can pick which ones you want to utilize to make the purchase. So it can't just be where we've been of just SBA, just cash, just rollover. Speak to a funding company, whether it's Benetrends or anybody else, and figure out all of your options. Using a stock portfolio, maybe leveraging it instead of selling it, using your cash in a different way to structure it so you can exit with no tax implications. All of these different things. So that's probably what I would say is different, because the lending products have mostly remained the same. I'm sure we'll talk about what the banks are doing with SBA. So that's mostly on the candidate side, the person that's looking to buy the business. On the franchisor side, again, to steal another line, which, I know is a mutual friend of ours, a gentleman by the name of Rocco Fiorentino, who's a legend within the industry. Rocco always would say is, listen, if you give the keys to the candidate to the bus, they're going to crash the bus. And he would use the car dealership example. So I walk into a car dealership, I say, that's the truck that I want. And they say, great, go to the bank, find out if you can finance it, come back and we'll get this all done. And then I leave and then I go to the next dealership and it's a Ford dealership. And they say, great, we have Ford Motor Credit. We'll get you pre-approved right here. We'll get you financed right here. and you don't leave without having that deal done. For franchisors to not think that it is their job to at least get the candidate on the path of figuring out how they're going to fund it or having a funding relationship in place is going to lose them deals. When people are looking at business opportunities and I call ABC franchise and they say, here's our investment level, go figure out what you can afford and let us know and we'll talk about territory and everything else. And then I call XYZ franchise. Let's go ahead and get you pre-qualified. Once you're pre-qualified, we'll talk about territory. Here's the banks that we work with for our SBA loan. Here's the company that will help you with your business plan. They'll help you with rollovers, all these other aspects. So you really got to get that dialed in from the franchisor side, especially in this environment.
Yep. And I just want to jump in here, Eric, because that what you just said is so important. Again, I'm on the franchise development side. We work primarily with franchisors, but we also have our sales division where we have a team of people who are in the business of helping to recruit and award franchises for our clients. And although we're not brokers, we do a lot of the same things in the sense that, you know, we've got to guide the candidate through the process. And, you know, as I've always felt, you know, if you're a real estate broker and you're trying to sell a house and you can't direct the candidate to a mortgage broker or a mortgage or a bank, or to use your example, an automobile dealership, and you can't fund the purchase, chances are you're not going to make the sale for a variety of reasons. A, because in the world of buying real estate or buying a car or starting a business, in most cases, in many cases, maybe not most, in many cases, people need financing. And it's one of those things where when you start speaking with people about it, their eyes glaze over and they become overwhelmed with just the whole idea of how do I do this? And, you know, then they may go speak to a local bank and the banker just gives them a whole bunch of jargon and they give up. You know, I tell people all the time, you know, so many deals, so many business deals, they die in the parking lot of the bank because people just can't deal with it. So I'm 100% on board with that notion. As a franchisor, and former franchisor and working with franchisors, there are a lot of franchisors that don't get involved with this. Their position is the candidate's on their own. And I see that they lose the opportunity to award franchises to good franchisees, people who would be good franchisees. Sometimes the franchisors take the position, well, if they don't have the money, we don't want them. They're marginal. And I don't necessarily believe that because I've been doing this for 35 years. And if I were to line up all the people that, you know, some franchisors would call marginal, I would probably have a list of millionaires today to show those franchisors what they passed up on. So what kind of, you know, when you're dealing with bringing franchisors into the Benetrends fold, what kind of challenges do you face with that? Because some of them just don't get it.
Yeah, you know, it's so great that you get that because coming from your world, because it's a frustration of mine. It's like, you know, you nailed the example before. The real estate agent isn't going to take someone to show a house that they can't afford. It's a waste of the client's time. It's a waste of their own time. And in all these different realms, it's easy to have that conversation come up. But I feel like in the franchisor world, especially with emerging brands, it's like, well, I don't want to ask that question. I'm just going to, you know, see what happens. And one of my favorite lines ever, and I know I keep dropping lines of other people, but hope is not a funding strategy. And hope is not a development strategy.
Hope is
you
not
can't
a plan.
sit there and hope. And the other thing I've hated most, and the reason I love working with franchisors, especially emerging brands, is something I want to eliminate in my time in franchising is, you know, they call it the SNO number, sold, not open. Your job is not to sell somebody a license. Your job is to get them open, generating revenue, therefore generating franchise fees and royalties and everything else. So they're making money and you're making money. So just getting somebody that said, well, I think they can pay the franchise fee, but do they need a loan for location one? Are they buying multiple licenses when that's really going to hurt the liquidity and getting that one? So having them understand what multi-unit development does and how it impacts it. When a client should get pre-qualified. I will tell franchisors today in 2020, it's funny because also you said, on the sales process, you want to test engagement with your candidates, right? Give them little homework assignments.
Yep, absolutely.
If they're not willing to fill out a 2-page pre-qualification application, are they really dedicated to buying this business? Are they professional enough to run your business? And more importantly, if you have a buyer today that is considering doing an SBA loan because of the volatility of the banks, my biggest piece of advice in 2020 to franchisors, you do not let anybody attend a discovery day that has not either been at least pre-qualified or at least put together their package to get to a bank. Because if you're going to say now they're ready to move forward and now you get them to the banks, and now it's a scramble of, do they sign before they know what a bank's going to say? How does this work? How does that work? It really is a mad scramble, and speed and SBA and the banking industry do not collide well. So, yeah, so it is just really challenging to get the franchisors to understand. I mean, I love the IFA. I'm on the membership committee, so we meet a lot of the new franchisors, and they'll be the first to get the franchise attorneys, the first to get the operations manual. And I'm like, hey, it's Benetrends. We want to help you with your funding. We're okay there. I'm like, okay,
Yeah.
And then you find out too late that, because again, just because somebody could fund it doesn't mean they also funded it the right way, like we talked about in the beginning.
Yeah.
And you don't want someone to open one that bought 5, but they can't open 2, 3, 4, and 5.
Yep.
So.
Yep. Absolutely. And I think kind of the takeaway here, and being on the franchisor side, for the most part, I mean, we're on the sales side, but most of my work is with franchisors. And to your point, I play in that pond of startups and emergings. That's all we do. And, the two things that I'll say, one is, when we take on a client that we haven't actually done the franchise development work for, they're already a franchise, we come in, and in addition to looking at and kind of doing the test of how happy their franchisees are before we'll take them on as client, and kind of learning more about them in terms of what their strategies and goals are, we look very heavily at their sold to open ratio. For a variety of reasons. First of all, it kind of underscores whether they're just out there collecting franchise fees, which is usually a sign that as a franchisor, they're underfunded. So they need to sell franchises to keep the lights on. That's the kiss of death. And it also tells us whether or not they understand that they're in the business of opening shops, opening locations, and not just selling them, that they've got to supply service after the sale. And I guess the takeaway that I would have from your last statement in this conversation is that the goal really is the same for both the franchisor and the franchisee. And that is to make sure that if in fact the franchisor wants to get committed to the potential franchisee and vice versa, that financially they are planned and prepared to do so, that they haven't gone down the path, spent a ton of time and energy and money, and then find out, well, we can't get financed, and the whole thing just blows up. So, I think that's interesting that, those two things are connected, as you point out. Any last thoughts you want to give to us? And when we post this on YouTube and LinkedIn and on the Apple and Google podcast platforms, we will give your contact information. But is there any last thoughts you want to leave with us about Benetrends and franchising and funding in general?
No, I think you nailed it. And I think the scenarios that we talked about in the examples, I just think for everybody, for the franchisor, you got to give them a path. You got to show them how that process works. And especially for emerging brands like you talked about, an emerging brand wants to appear to have the presence of a big brand. So it's nice when somebody looks at an emerging brand and, yeah, we're emerging, but our operations manual is dialed in. Here's our marketing. we have funding lined up, we have insurance, we have this. Just because we're an emerging brand doesn't mean that we don't have these things lined up. So I think it's very important there. And again, I think for the candidate, the person looking to make the acquisition, how you fund it is super important. The amount, I told you, I really have made it a passion of mine to end the sold, not open aspect going on in franchising. And a lot of that goes to, I'm tired of meeting people that call me and say, hey, I bought 3 licenses of something. I opened the first one with all my cash. Now I need a loan for the second one. And I don't have any liquidity to put in that. And I can't find a bank to do the loan. What options do you have? And I think we know what the answer is there.
Yep.
So
Yeah.
it's really just stop worrying about the hammer. Look at all the tools. For a franchisor, provide those tools. And for a candidate thinking about it, look at all of your options and, making the right decision, because how you fund it is as important as the business that you're buying.
Yeah, absolutely. And I will tell you, preaching to the choir for sure. I couldn't agree with you more. Best way to reach you for the listeners who now have a little bit of a tease here and they want to get some more information. How do they get in touch with you at Benetrends?
Fortunately, with a last name like Schecterman, they did give me an email address of just eric@benetrends.com. So that's ERIC@benetrends.com. I know we were joking earlier, those that see the Schecterman license plate, that's also for that last name. I even have the email address Schecterman@benetrends.com. You could do that. You could visit our website. You could call me directly. I know people have access to my information there. And our entire team of funding consultants, there's no cost to talk to us. There's no commitment to just find out what your options are as a candidate, as a franchisor, all of our tools to find out what's available to you. It's really what we love to do.
Great. And that's for both franchisees seeking financing and franchisors who are looking to make sure they have a good funding source available for their potential franchisees, right? They just
Absolutely.
Get in touch with you. Well, Eric, thank you very much for being with us today. As we kind of continue our journey through the current pandemic and franchising, and we just keep getting stronger and stronger. As Alicia Visconti always says, franchise strong. So I'm on board with that. Thank you so much for being with us today, and I hope to see you again soon, perhaps in person, not on a Zoom.
It's my pleasure. Thank you, everybody, for listening, and thank you for having me join your audience today.
All righty, be well. Bye-bye.